Good morning, everybody. Welcome to this vlog, this workshop on how to complete a Cyprus tax return. The tax return is brand new and radically different from previous tax returns that we've had. I have got help. I have got assistance. I hope you can hear me. But we've still got some people joining, so welcome as you join up. And Anya and the team should be allowing people in as well. In 2016, international law changed on tax with exchange of information. And this allows countries, or requires countries under double taxation treaties to share information with each other. And this automatic exchange of information allows tax returns to be reconciled and expats' income from one country to be shared into another. And Cyprus is sort of started to catch up here. So although online tax returns have been available since 2011, they're now compulsory, and they've gone to the next level with two complications this year. One is COVID and the delays that that's caused, and the second is the new health tax that was introduced last year. That you will love as we go through it. This is not, unfortunately, a big on visuals. There's not a lot of visual aids I've got here. I can't show you a particular detailed return because it's all online, and I can't show you confidential information for other people. So I'm making a reference system, and if you've got some questions, if you've got any questions, just put them in the chat room at the bottom of the thing. Can I just confirm that everybody can hear me? I've got a couple of people saying that they can't hear me.
I can hear you, no problem.
I just need somebody to give me a yes to say that the sound is on.
Yes, yeah, the sound is on, yep.
Yep.
Anna, could you just type in and confirm that you can hear me now, please?
Yes, I can hear you too.
Right, can anybody hear me now?
Yes, I can hear you.
Okay. Thank you. Right, so there is exchange of information came in 2016. That to allow countries to exchange information between each other, and that means that expats earning money in one country will have the information shared with another. So a bank in Russia will take that information and share it with the Cyprus Tax Return, or a pension payer in the UK will collect that information and share it with the Cyprus tax authorities for residence address. We've got people joining us. For the purpose of this exercise, we haven't got a detail, it's not highly visual. What we're trying to do is give you access to tax and the issue that needs to be done. This tax return is put up with two situations. One is COVID, which has delayed the rollout of the return. It's originally due by the 31st of July, now been extended to the 30th of October, but that's still only a month ahead. And by that time, if you've got any tax that's outstanding to be paid, that needs to be paid by the 30th of October already. There are certain taxes in Cyprus which are for defence taxes and health taxes, which you can pay during the allotted times on JCC or through the bank. But if you don't, and those windows of opportunity to pay aren't done, you have to create the tax liability. The only way to do that is to complete a tax return. And that doesn't mean, so that means even if you're income below 19,500, you've got tax to pay, you have to complete the return to pay that tax. You get a tax code by completing the return, which you then submit through a bank payment or JCC. If you've got tax that you want to claim because you've got very small income, you still have to do a tax return. And the first thing that questions come up from Marilyn is knowing what your tax ID is. Everybody should have that now. Cyprus do issue a certificate of a tax ID. But again, nothing is as simple as complicated as that. On this tax certificate, that's where they join together the pieces of your nationality, where your residential address is, and for your Cyprus tax liability. And also it gives you an online tax registration number. So having a tax residence, a tax number, which you will need, as you know, for your bank accounts, for your investment accounts, for pension providers, when buying property, when anything to do with the financial transaction. In addition to that tax ID, the online tax registration is a separate process. And one thing, the first thing that can confuse people in Cyprus is it's online for VAT and for tax. Now, the system isn't clean and straightforward. There's a separate online VAT tax registration and for income tax registration. And obviously VAT is only for businesses that need to register that. So that needs to be the first thing. If you haven't got an online account, then you need to have an updated certificate of your taxpayer status and the personal information that you've got in Cyprus, so that they can, and on this will be a reference number for you to get into the online tax registration system. Up until last month, there wasn't much else information you could get, but there was rolling out to get more access about your accounts and what payments you've done online. But you do need to complete this return to pay any tax by the 30th of October. The health tax that is due is due from the 1st of March 2019. Now, the tax return, as you go through it in the system, doesn't refer to the variations and the changes that have arisen because of COVID. So it still refers to the original timelines where there was one rate for 2019, another rate for 2020, and slightly different rates for different types of income, just to confuse it. And everybody has to pay health tax on their worldwide income, no matter where it comes from. And no matter, so if you're a Cyprus tax resident, you have a liability to this worldwide health tax. Now, there are people that can get exemptions to that, and generally that is S1 holders who've registered. But if you're not already registered on that system as an S1 holder, two things won't happen. A, you won't have an exemption number for your S1. You won't have a tax reference number for your S1, which you need to complete the online tax return. So if you haven't got that exemption number, your tax return will come up and ask you to pay that health tax automatically. And there's no getting away from that. So if you haven't got a tax exemption letter for healthcare and you think you need one, then you need to think about think about getting that registration done straight away. But even then, it might be too late, and you might need to do the return and pay the tax and take it back afterwards. And just a second note is that the health tax exemption is generally only due for a limited period of time. So look at your letter carefully. It might be say for 4 years, and might cover you up to 2020. So then that will need to be renewed 2020 and 2021 taxes, which is something to bear in mind. As we're going through. But this is all about coordination of social security systems. And in the old days, there was an E121 that was issued by health services to exchange healthcare between countries. Now, with Brexit coming up, it will change many things. It doesn't change a tax situation, but it could change the coordination of social security systems and healthcare systems. And the reason for that is that the UK have got a bilateral treaty with the EU, and that needs to be renegotiated or extended beyond the end of the year. Now, I've got no doubt that that will happen, but until it happens, we don't know that the S1s will continue, and hence we don't know if the health tax exemptions will continue. But let's assume for now that they are, and they certainly are for 2019, if you've got your exemption certificate. There is no mechanism in the system or anticipation of people who are liable to be exempt from paying the health tax because they've got an S1, and to allow that relief on this return. So if the system comes up with health tax for you to pay, there is no way of deducting that. That liability will arise. So you either pay it and claim it back, or you don't pay it and claim it back. But that won't be something that will hang over in this return. Otherwise, you have to pay. So if you look closely, anybody who's got an S1, if you've only got an old E121 and you haven't had an updated certificate, it won't necessarily have this. But the UK, under this coordination of social insurance agreements, they used to use just the national insurance number, but now they issue a reference number as well. So you need that reference number for Cyprus and the reference number for your home country that issued the S1 to go onto the tax return. We're still talking about the first couple of pages here. There's another type of tax that expats can qualify for, and this is the non-domicile certificate. So a new expat for up to 20 years, if they're not if the tax resident for 17 out of 20 years, can pay 0% tax on dividends and bank interest. So if you're a service company, if you're working through a service company and you're paying yourself dividends, as an expat who's a Cyprus tax resident, you can pay 0% tax on those dividends for 20 years. But again, you need a specific tax certificate from the Cyprus Tax Office in order to claim those exemptions on your return. So as you open up the return on the first page, as I say, apologies again for no visuals, but I'm going through the return as it is and as it stands. If you've got any questions, you can type them in the chat room, and I'll address them as we go along. So ask those questions to interrupt me as you go along, and then we'll answer them in there as well. So on the first page, you have to, and there's a separate return for self-employed and employed. So an employed return is for people that are employed in Cyprus or abroad, or they've got other income that is not from self-employment. And the first page is they have to declare if they are received any pension from Cyprus. Now this first page will block you from going any further and until you fill it out. But it's specifically asking if you earned a Cyprus pension, not received a pension while you're in Cyprus. The pension has to come from a Cyprus company or self-employment in Cyprus, and if so, you have to then enter your social insurance number for that work, your date of birth and your gender. So again, this is providing an exchange of information that allows you to go in there. So it's more information gathering by the tax office. So you're linking up there your social insurance and employment with your tax number. You then go into the self-employed pages. Now, the online return in Cyprus is great fun. It has to be filled in euro. So if you're earning income in other currencies, you have to exchange that at an agreed rate. In Cyprus, they use the European way of a comma denotes the decimal point. So when you're putting pence in any entry, it's comma 00 or comma 20. Another frustrating thing about Cyprus tax returns, and I do not know of any logical reason for this. I do not know the precise routine for it. But in certain columns, they want the decimal points, and in other columns, in calculations, they don't want the decimal points. And the whole return will fail and create errors if you put pence in, well, it doesn't want the cents, or if you don't put the cents in and it does. Same as if you use a full stop as your decimal point as opposed to a comma. There are 10 different types of salaried income that you can actually input. So some of them are more esoteric. They can come from trading and it can come from investments and performances. But it is asking you to categorize that income, whether it's earned in Cyprus or whether it's earned overseas. And also to denote in your income, you have to know the tax number of the payer. So whether the payer is abroad or at home, you should be putting in the tax number of that employer or that income payer. It often asks you if you're an officer for that employment. What that means is, are you an officer of the company? So a director or somebody operating a corporate company would say yes. They would have different social and income liabilities for that. And you have to differentiate your income between income in Cyprus and outside Cyprus. It can be treated slightly differently. Now, if it's, depending on where it's come from, and any tax withheld, so it doesn't matter whether the tax is withheld in Cyprus or abroad, you would put that amount in there. Noting that if you're receiving, for example, a Cyprus pension or other forms of investment income from Cyprus, they will deduct the health tax at source. So if you do get any withholding tax on any of the income that you do receive, then you'll need to put that amount in there as well. You should get pay slips, you should get an annual statement of your income, which should summarize those figures to put into this return. If you don't, you need to approach your employer. In section A2, if you're a new tax resident to Cyprus, in the first few years of your employment, you can get an additional tax relief on your income. So you then need to declare the date that you come to Cyprus and commence the employment. Pensions are detailed separately, and if you're receiving a state pension from Cyprus or another EU country, and your information is already connected, you'll actually find this already in there. You might just find that the type of income in there, but you might find the amount of income in there already. So under exchange of information, that information is already exchanged between governments, and Cyprus will know at least that you're getting a state pension from overseas. There's also a question on B2 that asks you is, do you have any retrospective income that you're declaring this year? So, if you feel that you've not declared your full income in previous years, you might want to declare it this year to avoid any later complications. It's the individual's responsibility to declare their income and pay their tax. It's not their tax agent, it's not their pension provider, it's not their employer. It's the individual's responsibility to do their tax return. And if you've got any gremlins or uncertainties, it's your obligation to tell the tax authorities. You're a tax agent, and ProACT do offer tax return services to clients. All we do is help you maximise your reliefs, so you pay the minimum amount of tax, but it has to be fully declared. If you're completing a self-employed return on the income, you're in effect having to put in a full management account into your return. Oops. I've just seen my chat box coming up, and I'm scrolling up instead of scrolling down. So I've just seen another question in there. Tom has said about the S1 exemption. Submitting, when you register with GESI, then you register with your doctor, and then you register your S1. That is not enough for tax. There is a fourth submission that you have to make to get the exemption certificate for the health taxes and your exemption certificate number for your tax return. It's a separate submission that needs to be done once you've got your GESI registration and once you've got your tax number, and that needs to be done separately. In addition, going back to self-employed, so you have to do a minimum account. The tax, they're concerned to look at your turnover and look at your general expenses, either as an employer, wages and social insurance, or your general motor and repairs and rent expenses. A taxman isn't much bothered about the detail of that. What they look at is the percentages. Is it realistic that what they're putting in, or is there obviously some naughtiness going on? That's what they will look at. So the general figures need to stack up, but you need to always have the supporting paperwork. But on the self-employed account as well, it is quite heavy on intellectual property rights. So if you're operating and issuing licenses and royalties for your business or your subcontract business, then those capital assets and incomes from those will require separate filling in. Now, for most people that are on earned income or pension income, those wouldn't apply. If you are licensing and receiving royalties and payments, and you need specific advice on that for completing the return, in addition, that's not for this event, but we can help you if you want to contact us and discuss that. Similarly, on self-employed, it then goes on to having calculated your profit of one of your capital allowances. So if you're buying more machinery, more equipment, more fittings, that capital expenditure allows capital allowances that you can reduce off against other income. You can claim as much as you like in your accounts, but obviously some of the things that a business might pay out for are not necessarily, they might reduce the profit, but they might not be allowable against tax. So if you paid any fines or late penalties for tax or cars or entertainments, or any other expenses are not allowable. They may be part of your net profit for your business, but they're not allowable against the tax rate, and you need to declare them in there. So moving on to section C, this is about rented property. Now, Cyprus rented property is big business and it's quite complicated. There's capital taxes involved there is also 2 types of taxes affecting rents, maybe 3, because VAT can be applied to commercial rents. So the tax return for Cyprus property requires you to enter the property land registry number. It requires you to add the cost and the area that you bought, and it also requires you to go into detail of ownership and what the rents are. Some rents, the tenant is required to deduct the property defence tax and the health tax from the rent that they pay, and then pay that for the landlord. So individual landlords, sometimes those taxes needed to be paid, those health taxes need to be paid, and defence contributions from the gross rental. So if you've done that, then you need to put those deductions that the tenant has deducted from the rents he pays you, you need to put those on. But the gross rent is what you need to declare as an income, because you have a defence tax of flat rate of 3%, plus you have a health tax, 1.7% for 2019 to pay against that, unless you've got any exemption certificates. Any interest that's receivable, again, is not subject to income taxes. It's subject to a tax on interest or on dividends. So that could be 30% or 17%, unless you've got a non-dom certificate. If you've got a non-dom certificate that says you can pay 0% tax, you still have to declare the income. So your overseas dividend and taxpayer are sharing that information with Cyprus, need to be putting it on your return if that income comes from in Cyprus or outside Cyprus. And again, the section E is asking you for the tax number of the income payer. A ditto with dividends. So all that information should be on your annual statement from your bank, your investment house, or your portfolio manager. We've got as well, there's some minor taxes which don't involve everybody every time. So section G is if you're redeeming life policies. So you can get tax relief on life assurance and tax and medical insurance. But if you cancel the policy early, then taxes are potentially liable on how much you cash that in for. So it's a non-standard thing. If you've got a question, ask us another time. Just going back to the self-employed income, your taxable income is your net income. So if you've got self-employed income and pension income, that goes to create your taxable income. So sure, if you've got a self-employed business and that runs at a 10,000 loss and you've got a 20,000 pension income, your net taxable income is going to be 10. Okay. The defence taxes, the fixed flat rate taxes might apply slightly differently. There are some tax exempt incomes, and these are for scholarships or for trading profits on currency dealings and what have you, which makes Cyprus attractive for that, but also exemptions for diplomats and public servants. So public servants in Cyprus have lots of benefits and allowances, expenses which aren't taxed, funnily enough. If you've got any problems adding any income into any of those other parts, there's a section I where you can add any other income. And this could be overseas rental income, it could be personal earnings, or it could be simple earnings which aren't complicated for any other reason. But I've done this wrong. Section I allows you to put any other income that doesn't fit in with the Cyprus Tax Return. So the Cyprus Tax Return is asking you for the details in the Cyprus way of especially property, for example. If it doesn't fit in there, you could put it under other income. It's better to declare the income and ask for it to be amended than not declare it at all. There's a couple of separate investment schemes for innovative companies, but there's only 39 companies you can invest in Cyprus. So if you are investing in those, it's a way of getting additional relief in Cyprus. So if you have got a big tax liability, look up the Innovative Companies Scheme, because it is a way of getting up to 50% tax relief on your income each year. Section 5C asks you to put in the details of any life insurance premiums, social insurance, pensions and provident funds that you paid into. So this is where you're paying for private medical or into social insurance or medical insurance for your long-term wealth. So, and that becomes an item of tax relief to you. Everybody who earns income over 19,500 must complete a return, but they also have a liability to health tax. So if you haven't paid your health tax on your worldwide income, on every penny of your worldwide income and gains, and if you've not paid your defence tax on dividends or bank interest or or royalties during the year, then you've missed the time slot to pay it as you go along. Then the only way to create the liability to pay that tax is to complete the full tax return. And there's been some confusion among expats that people just pay the tax with their tax return. That is too late. You will get a penalty from the Cyprus tax authorities for that. Yet you should be paying tax twice a year on income in July and December, and you should be paying quarterly or monthly for rental or health tax or defence tax if you've got those liabilities. If you've got an S1, it's only people with an S1 or a Cyprus pension that are exempt from paying the health tax. Otherwise, it's a flat rate tax on worldwide income, and it will come up on the return for everybody who hasn't got the exemption letter. So if you haven't got the exemption letter, contact us at ProACTPartnership.com and we'll give you a guidance on either how to get that or how not. Because when you come to a computation of your tax on the back pages, it's a very, very, very complicated tax calculation for health. It's already filled out for you. It fills out and you cannot delete it. And it will assess you with to pay that health tax at a rate depending upon the type of income, whether it's employment, self-employment, pensions, interest, dividends, or any other income. So that health tax form will calculate so that's my quick assessment. Time to go into more detail side. I know there's lots more questions, so we will run some more on this, and we're going to rerun on this, and then we'll try and hone down on the areas of difficulty for people. But meanwhile, if you contact us at ProACTPartnership.com, we can help you more. So thanks very much, and maybe next time we'll run one for many hours instead of for half an hour. Okay, thanks very much, and see you next time.